So good morning, YouTube. Good morning, Trade Pros. Victor from TradePro Academy. And today we've got another morning market update for you as we wrap up the end of the week, the last day of the week. I hope everyone's doing well. Hello, Lee, William. Hope everyone's having a good morning here. And let's just get right into this. So in equities, we've had more of mixed signals this morning. Chinese shares have turned lower while coronavirus fears have continued to put a cap on U.S. futures. We saw a slight little drop here overnight in the U.S. futures market, mainly the S&P 500 as NASDAQ just continues to press to new highs from what it seems. Overnight, the MSCI Asia Pacific Index dropped 1%, while Japan's Topix Index slumped about 1.4%. In Europe, the Stoxx 600 Index was 0.3% higher by about 6 a.m. Eastern Time, EST, and tech shares rallied. So the S&P 500 pointed slightly lower into this open, and from yesterday's open, and the 10-year Treasury yield was at 0.579% as we continue to see a pop in gold. So NASDAQ's continuing to hit all-time highs. Yesterday we closed near an all-time high throughout the session. We did hit a new all-time high as Microsoft and Amazon shares continue to rally. So amidst of a flurry of updates as debt remains in demand and the dollar dips, we've seen kind of a choppy week in U.S. markets, especially the S&P 500, where we get these more erratic movements towards the end of this week. So we'll see how we end up closing this week around. So the U.S. is said to be mulling a tariff list against France for about 500 to 700 million US dollars in goods, and Texas COVID cases have increased, but they have increased by the most since the pandemic began, and the governor predicts that next week will be worse. So EU Council President Michel proposes a budget of 1.074 trillion euros and recovery fund total maintained at 750 billion euros. Now, the IEA raises 2020 oil demand forecast by about 400,000 barrels per day, and demand decline in Q2 was less severe than we expected. So we've seen a slight increase in demand of crude. Will we end up passing through that 41 level? It looks like crude is pretty complacent between that 39 and 40 area. Dollars per barrel. So if we can see that demand rise, we'll probably see territories of $50 to $60 maybe into the fall. Typically, the seasonality for oil, as we've seen, is throughout the summer months. But as you know, due to recent pandemic issues, we've seen a slight decline in travel overall. More than a slight decline, but yeah. So China's foreign ministry says China will impose reciprocal measures of U.S. If the U.S. insists on moving forward with its sanctions. So that's interesting to note. Throughout all of this, we still have to keep an eye out on the China and U.S. tariffs and also the trade deal. So large cap Chinese shares were pressured after two state-backed funds said they plan on trimming holdings. So looking ahead, highlights include U.S. PPI data and Canadian labor market report as we get ready to wrap up this week. But it's getting a lot harder to bet on a strong economy as a wave of states start opening up their economies and have directly resulted in a new wave and a higher increase in COVID infections. So this hasn't come as a major issue to the stock market yet, as the Dow Jones Industrial Average is on pace for a small loss this week, but the S&P 500 and the tech-heavy NASDAQ are both up on the week. So a large majority of the S&P is actually the FANG, which is kind of propping up a lot of this S&P movement. It's still showing some kind of weakness and chop. It's not as strong as the NASDAQ, but we've seen some strength in recent hours even on the S&P as we dipped pretty aggressively into that 3110 overnight. But some perspectives, the S&P has been treading water for about a month now. Traders might be bullish, but it seems like they're more blind. The economy is still pinned down by this pandemic. And big money investors are also out of this market. There's about $5 trillion sitting in cash or money market funds that is parked money that's getting nervous that this market may not rally as aggressively and may actually see a dip in the coming future. So investors continue to favor many of the mega cap growth stocks that have outperformed throughout the market turmoil. And gold was among one of the winners this week as we've seen it hit that 1830 area, making its move near that $1,900 mark. Now, while shares of energy slightly took a hit. So the Chinese currency, the yuan, this week strengthened to levels that it hadn't hit since last March. And local financial markets have rallied as confidence builds in the country's economy and is shaking off this pandemic. So the optimism spurred mainland China shares to a multi-year high in recent days, unleashing a frenzy of trading activity, with many investors positioning for an even bigger advance. Remember, Chinese government officials recently said that the public should be buying equities because we're in for the biggest equity rally we've seen yet in China. Now, in terms of what we've heard about some Trump financial statements in recent days, the Supreme Court paved the way for a New York prosecutor to enforce a subpoena for Trump's financial and tax records, but issued a mixed decision in a related case involving subpoenas for and from Congress. So the decision sends the cases back to lower courts where Trump can raise additional objections. So the rulings on the powers, privileges, and immunities for the presidency are still in question here. So in terms of more COVID news, I don't know if a lot of you still want to be hearing this stuff, but it is our reality as Texas Governor Greg Abbott suspended elective surgeries in dozens more counties. So California, Arizona, and Arkansas again reported record highs in COVID-related hospitalizations, while the number of COVID-19 patients in hospital beds in Louisiana has reached the highest level since mid-May. So new COVID cases in the U.S. have rose more than 63,000 in a single day. This is a record, as hospitals in a number of states strain to accommodate a surge of new patients. So the WHO revised its guidelines concerning how COVID spreads, saying that people who are talking or singing may expel the virus throughout tiny airborne particles. So the WHO also said that nearly half of all COVID transmissions might come from individuals who have yet to show any symptoms. While President Trump has embraced reopening schools as a pitch that could help his re-election campaign, new applications for unemployment benefits in the U.S. edged down last week as well. So a number of people receiving payments fell to the lowest level since mid-April, as Treasury Secretary Mnuchin said that the Trump administration is working with the Senate to pass a new bill for COVID-related economic aid by the end of July, so we could see some more stimulus. Now, in terms of market news, that was kind of what we had today, overall news that we've seen over the past day and night. But the S&P 500 is edging slightly higher this morning as we hit an overnight low of 3,111.5. Now we're edging a little higher. We're into that 3,150 territory, 40 territory, where we're printing higher highs and higher lows. What we could see is a pop into the end of the week to close out the week strong, as NASDAQ is showing a lot of resilience and has been leading the S&P for quite some time now. If we start to see that break, NASDAQ starts breaking into new all-time highs. The previous day high, 10,774, the all-time high on the NASDAQ futures market. If we start to see a breakthrough that, it'll carry the S&P upward and maybe through that 3170 resistance. It gets a lot more bearish under this 3110, as we can see a slip under that 3100, but we're going to have to see maybe some news-driven events for that, as it looks like this market wants to end the week strong. In gold news, gold is currently at 1814. Previous day high at 1823, and if we do manage to crack that 1830, the gold bugs will rejoice, as we'll make our way into that 1900 area. I believe the high was about 1920 or so, and we'll see if we can pop into that area. Having said that, thank you, YouTube, for joining us today, and we'll see everyone next week. We're going to jump into our trading room and see if we can find some kind of opportunity today, as it seems that we have more volume traded than yesterday. Yesterday, we had some good volatility, good movement midday, where we took advantage and had about 83-85% of our traders in our room green. So if you guys want to check that out, jump on in and join us shortly as we get ready for this U.S. market open. Happy trading, happy weekend, everyone. Stay safe, and we'll see everyone next week.